everyone. My name
Da,
is
deli.
Lora Terzieva, and I'm manager in the indirect tax practice of Ernst & Young Bulgaria. I hope and I assume that probably most of you are aware who Ernst & Young are, but anyway, just a brief introduction. Ernst & Young is a multinational firm for providing for providing professional services in tax, law, consulting, assurance, and we are present in almost everywhere around the world. Today I'm here with some of my colleagues, part of our Bulgarian tax team, and because I know that maybe a lot of you are from neighboring countries as Albania, North Macedonia, I would mention also that our tax leaders in Bulgaria are responsible for the North Macedonian and Albanian markets. So after the presentation, if you have any questions or particular requests, we'll be happy to speak with you. Today, I'm going to speak about the trends of the taxation of e-commerce. And if we should very briefly say what is the trend in the taxation of e-commerce, definitely it will be the fact that for sure the e-commerce is in the focus of the tax authorities all around the European Union, as well as in the focus of the politicians in the European Union. And these two facts could be seen very clearly based on a lot of legislative changes which could be monitoring on the EU level, as well as from some practical aspects. When we speak about practical aspects, of course, I will speak about the developments on in Bulgaria, and just a few things to be mentioned. First, the Bulgarian tax authorities are already very well familiar with the e-commerce, how it operates, and they are specialized tax audit units within the tax authority system, which are focused and specialized in the performing tax audit procedures of online traders. Respectively, they are using a lot of special methodologies in performing these tax audits, in requesting, for example, information from third parties as courier firms, as payment service providers, etc. And something else is the enhanced cross-border cooperation, especially in the European Union, where the tax authorities are in a very good connection with each other and are exchanging information and facts about the presence of different online traders in the different European countries. And when we are speaking about the cooperation between the tax authorities in different member states, first I would like to mention several legislative changes which are already in force and which are impacting, in our view, very seriously the e-commerce business. As you see from these legislative changes, the fact is that the tax authorities are using very enhanced and different methods for monitoring the trade, which is the online trade. The first of these instruments or methods are actually the so-called CSOP reporting. I guess that some of you are familiar with this abbreviature, and it basically represents an obligation of the payment service providers to report to the tax authorities information about the payments which they, for which they act as an intermediary. And when we speak about payment service providers, the obliged person here include banks, other payment service providers. It includes also e-money companies, etc. The purpose of this obligation for the payment service providers is basically for the tax authorities to be able to gather information for the transactions performed between online traders and the recipient of the services or the goods. The purpose of this is the fact that the online trade facilitates the result that in many cases actually the party which is receiving the payments for these sales of goods or services could not be identified by the tax authorities because, for example, this party is possible to not have a permanent address, to not have any premises for the trading, etc. So it is good to know that if you are selling sales or goods and if you are receiving the so-called cross-border payments, these are payments made by recipients which are established in another EU member state or even outside the EU. The payment service, your payment service provider, your bank or one other payment service institution will be obliged to report the payments received by you to the tax authorities in the country in which you have basically sold the goods or the services. And in the next slide, we have included some practical example. For example, if we have a Bulgarian online trader who is selling goods to a German customer. Below you can see the two bank or two payment institutions, the one serving the supplier of the goods and the other one which is serving the recipient of the goods or the end customer. In this case, in practice, the payment institution which is providing services to the online trader, which is in the case Bulgarian entity, will be obliged to submit information to the Bulgarian tax authorities about the payments which the supplier or the online trader has received from the German end customer. This information, which the tax authorities in the different member states will be receiving on a quarterly basis, will be gathered together, will be collected by a centralized European authority, and actually it is already actually created a central register for the payments received, the so-called CSOP, and this is also the reason why the reform is familiar as CSOP reporting. The other legislative change, which is related to, again, compliance and reporting obligation and which is affecting the e-commerce is the so-called, it's again an initiative at European level and it's adopted in almost every member state. It is the so-called, and maybe you are familiar with it, the DAX 7 reporting. Basically, this reporting is focused on the online platforms or the so-called marketplaces. The platforms would be obliged to submit certain information to the tax authorities in the different countries about the activities, the trading activities which have been performed through this platform. You are all aware, so I will not go into much details, but the platform basically acts in these cases, the marketplaces, they are acting as an intermediary between the sellers and the recipient of the goods or services. And because of this role of the platforms or the marketplaces, the politicians at the EU level are imposing obligations to them to gather specific information about the sellers which are registered in these platforms and which are offering their services or sales through the platforms. There are specific trading activities which will be reportable through this compliance and reporting obligation. It's these are actually rent of real estate, providing personal services, selling of goods, and renting of any kind of transport vehicles. So you can see that the scope of the trading activities which will be reportable through the platforms or through these online operators is actually big. So there is a lot of possibilities to fall within this scope. The obligation is imposed to the online platforms, but the online platforms would require certain information from the sellers when they are registering through the platform, or from the sellers who are already registered in these platforms. The information is also, the scope of the information which will be reported is also very broadly defined. And it will basically include information which could help the tax authorities to identify the sellers. Again, the purpose of this reporting obligation is to give an opportunity and to allow the tax authorities to identify the sellers, which in some other cases it might be very difficult to be identified, and respectively to be assessed whether they are obtained the registration which they should possess, and whether they are reporting all tax obligations which they should report. And again, here we have tried to present some practical example. In this case, we have a Bulgarian seller who is using a platform, a marketplace, for offering its services, and is providing, let's say, rental services to a client or end customer which is located in Germany. In this case, the platform or the marketplace will be obliged to provide information about the activities performed by the online trader, by the online shop. Let's say information such as for how long the premises are rented, what is the remuneration received by this trader, what is the amount of the commission which the trader has paid to the platform, etc. And this information then will be also transferred to the tax administration in the other member state where the end customer is established. All of these reporting obligations which I mentioned so far, they are already in place. Actually, the 1st of April was the first deadline for the purposes of reporting for CSOP. So we assume that a lot of payment service providers have already provided information to the respective tax authorities about the payments which they have facilitated during the first 3 months of this year. Another, I would say, incentive or a relief, especially in the field of VAT, which is currently in place, but in our practice, we have noticed that maybe the online traders are not very well familiar with this, and is not used by a lot of online traders, is the so-called one-stop shop VAT registration, let's say. What is the purpose of this, and why I say that it's an incentive in some way? The main principle in in charging the VAT upon sale of goods is that the VAT should be charged in the country where the goods are consumed. Sometimes this is impossible, or the traders could very easily escape from these obligations because they have no presence in the member state where actually they are selling the goods. This one-stop shop registration allows the online trader to register for VAT only in one member state and to report its VAT obligations in every member state, to pay its VAT obligations which are due in every member state just in one. For example, if we have, let's say, a Bulgarian trader who is selling goods all over the countries in the European Union, respectively, probably, of course, it depends also on the local legislation in these countries, but most probably an obligation for VAT registration for this online trader will arise in every one of the member states. Of course, this is connected with a lot of administrative and compliance costs and difficulties. So the VAT legislation at EU level at the moment allows this online trader to register, for example, for this regime called one-stop shop only in Bulgaria, and to report and pay its VAT obligations in Bulgaria, applying the VAT rates which will be applicable, for example, in Germany, in Austria, and in the other member state where the goods are sold. But this actually will allow the online trader to mitigate its costs and difficulties and complexities in the other EU member state. If we should speak about what is coming in the field of taxation of e-commerce, generally in the field of taxation, the main trend which could be noticed at EU level and also on a global level is the digitalization of the tax administrations, which very briefly means that the tax administrations all over the world are imposing different and many reporting obligations which should be automated and which should be submitted online via different platforms of the tax authorities. In this field, especially at EU level, what is coming is the e-invoicing, which is basically a change which will oblige the at first stage all cross-border transactions at EU level to be documented for VAT purposes with an electronic invoice, which will be either pre-cleared by the tax administration or will be reported to the tax administration almost in or even in real time. For example, Romania is one of the neighboring countries which have already implemented the e-invoicing, and we are seeing that many other EU countries is also going into this direction. For example, Italy, France, and maybe in several years it will come also to Bulgaria. What is Bulgaria and Bulgarian tax authorities are planning for now in the field of digitalization of the tax administration? It is the so-called SAFTI reporting. As a final words, I would say that you should be, as an online traders, very precautious and should try to keep your tax obligations as much as possible complied. And I believe it's this. Thank you.